we do think there's been some labor hoarding in here. The employment numbers have looked strong. If you peel the onion a bit, the underbelly of employment is not strong, with household employment essentially flat over the last 4 to 5 months, which includes a lot of small businesses. That's where we see a lot of the pain right now. But the labor hoarding is because companies couldn't get labor during the supply shock and the COVID. And so now that they can, they're holding on a little longer than I think they would normally. I'd be surprised if we go all the way to 6%. I do think the inventory recession will be somewhat sharp and will take the unemployment rate up, but I'd be surprised to see us get all the way to 6%. Our strategy has been hurt very, very much, as have most growth strategies, by the fears associated with inflation and higher interest rates. And as I mentioned, we think that's going to turn around. We see the growth coming out of these 5 platforms. These are 5 innovation platforms. These are exponential growth trajectories. And we faced a lot of COVID-related comparison issues in stocks like Roku, Teladoc, Zoom, and so forth. So there's been a lot of confusion on very short-term indicators in the market. But the explosive growth is there. It has happened, and we think it's going to continue. We see that in the global public equity markets, truly disruptive innovation, which is all we focus on, is priced at roughly $8 trillion in value in the markets today. That number, we believe, is going to more than 200 trillion during the next 8 to 10 years. So it's going from less than 10% of the global public equity market to what we believe will be 60%. And the reason we believe that it will move to that level is because these platforms are going to disrupt the traditional world order in a way like we have never seen before. We were not around in the early 1900s when telephone, electricity, and the automobile disrupted the existing world order. These are 5 platforms, not 3, and they involve 14 different technologies. So we think if we're right about what's going on in the economy right now, and inflation is going to come down fairly dramatically, that will be a big positive for growth stocks. The compression in our performance, what we do during periods like this is we concentrate our holdings towards our highest conviction names. So we have taken our flagship strategy from 55 names down to 33 names. We did the same thing during COVID, but that was just a 1 month worth of pain, and it was awfully painful over a month. And from the lows in COVID, we moved up in the span of less than a year by 360%. So that was probably ahead of its time. We've corrected tremendously. And now we have many what I would consider deep value stocks if you give us a 5-year investment time horizon.